Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with my good friend Brian. And in today's video, we're discussing critical 401k rollover rules that every investor must know for 2022. In our last rollover video, we briefly touched on this, but today we want to go deeper into what the new law covers and how it exactly impacts you and your hard-earned retirement savings. Specifically, what advisors must now disclose to you before you do a rollover from a workplace retirement account like a 401k.
This is a good thing, Michelle.
Mm-hmm.
For decades, we've seen Congress trying to pass bills that protect those who hold retirement accounts like 401ks. Finally, they passed the Prohibited Transaction Exemption 2020-02, also called the DOL Rule. You'll see it on the news as the DOL Rule. It became effective on February 16th of 2021, and the enforcement of the bill just started a couple weeks back there on July 1st of this year. And this is also...
it became effective. It became officially went into effect. Okay.
Well, this means on July 1st, Michelle, they're allowed to enforce the rule, meaning fines, penalties, removal from the business even of advisors. So pretty cool. The DOL rule is often referred to as the fiduciary bill, and it basically says that advisors must put consumers' interest ahead of their own.
Mm-hmm.
Really?
Yeah.
Shouldn't that already be the way to do business?
No, guess not. No.
Industry has fought it tooth and nail for years.
Yikes. Well, all right. So let's dive into, first of all, I'm glad this has happened. Secondly, the DOL rule states that advisors must put consumers' interests ahead of their own, right? So, but what does that look like specifically?
Okay. Here, by law now, advisors must, number one, admit their fiduciaries under their ERISA rules, which are the Employee Retirement Income Security Act of 1974. They must disclose in writing to the client the details of the relationship between client and advisor and any material conflicts of interest. That's huge. They must comply with DOL's impartial conduct standards, which require advisors to provide prudent investment advice, charge only reasonable compensation, and avoid misleading statements.
Yeah. That's just
that's just common sense to do business. But anyways, they've got to provide written disclosures to clients of why the recommendation to roll over their 401k or other workplace retirement account is in their best interest. They must tell them why it's their best interest. So they've also got to conduct an annual review of their firm's compliance with the rule and document the results in a written report to a senior executive officer of that firm.
Okay.
And then they've got to adopt and implement policies and procedures to comply with the DOL's rule, mitigate the conflicts of interest, and detail the reasoning for all rollovers going forward.
Yeah, it's really interesting how the line in there about the rollovers, advisors must now provide written disclosure to clients of why they're recommending a rollover type over another, because there are different types of rollovers. We'll put that video below. Go check that out. It's below in the description that we've done. But, or that they're going to go with why they're going with one company over another, like where you're rolling your money, well, the custodian you're putting your money in with, or you're going to invest your money with, right? How is this?
That comes right along the conflicts of interest.
Yeah.
So are you getting paid more to roll my funds to XYZ company instead of ABC company?
Right. And so one question I have about this, we've talked about this a lot on the channel, is how, we're here because we are tired of people being sold to, and people are tired of being a transaction as well, right? So we've talked about, there are companies that literally start dialing for dollars. They get told when someone like Susan leaves company A and goes to company B, and they start making those phone calls about, hey, do you want to roll over? How does that, they can't do that anymore, can they? Or do they have to? Then
they still can. They still can. But now, before they roll the funds over, they've got to go through that whole list of items that I just detailed
Right.
inside the bill. So
Okay.
there's a lot that has to be done. So everything's about this that has to be done prior to a rollover.
All right. So
And
I
the
just want to
client's
make,
got to sign for it.
and I want to be really clear on this so people watching understand. So if you do get one of these phone calls, which is, there's nothing wrong with that, right? Someone's
Right.
doing due diligence and they're, everyone's out to make some cash and they're doing you a favor. You don't want to leave it behind. We've talked about this a lot. It's just very expensive and not the wisest idea to leave a 401k behind with a previous employer. Right. So that said, so what you're saying is that if they do call you and they're like, look, roll over, and you decide to work with this person, before the rollover is done, they're going to have to disclose in writing the details of the relationship and any kind of conflict of interest, you name it. Like, they have the whole list and if they don't, then they are violating this new law.
Yeah. And that's where the DOL enforcement that started July 1st can come after that advisor. But along with what you just said, usually the one smiling and dialing and that calls you is not an advisor.
Right.
Okay. It's a firm that's going to then pass the information along to an advisor.
Got it.
So
okay. All right.
They are still allowed to make them phone calls unless you're on the do not call list, of course. So
this is why this video is so important. And I hope people are watching to this point, because if you don't get this information, if you don't get this written disclosure, then do not do the rollover.
Exactly. Period. Understand what you're getting today.
Yeah.
So,
all right. So on that note, we're going to wrap this up, but we'd love to know how you feel as a consumer now knowing that this bill was finally passed. Like, how do you feel about it? And do you have questions? Brian and I are always doing videos based on questions we receive. So tell us how you feel in the comments below. Leave us questions if you need clarifying. If you need some clarification, just let us know.
Exactly.
So, yeah. And while you're at it, if you liked the content of this video, hit that like button, please. Helps us grow the channel. Subscribe. And thank you for watching. And thanks, Brian, for everything. We appreciate it.
Thanks, everyone. Have a great day.